Navigating the Stock Market in 2024, a comprehensive guide for investors. The stock market in 2024 presents a complex and evolving landscape shaped by economic conditions, technological advancements, geopolitical events, and investor sentiment. Understanding how to navigate this dynamic environment requires a blend of technical knowledge, market awareness, and the ability to anticipate both opportunities and risks. In this book, we will explore the key factors influencing the market, strategies for making informed decisions, and potential investment opportunities that could define 2024 and beyond. By the end, you should have a robust framework for approaching the market and positioning your investments wisely. Chapter 1: The Current Market Environment. The economic backdrop in 2024 is marked by several defining trends: inflationary pressures, post-pandemic economic recovery, technological disruptions, and geopolitical uncertainties. Central banks worldwide continue to grapple with inflation control while maintaining growth. Rising interest rates have moderated, but remain a significant consideration for investors, impacting valuations across industries. At the same time, the global economy is navigating slower growth and lingering supply chain challenges from previous years. Investors in 2024 are also contending with shifting fiscal policies and the potential fallout from various geopolitical events, including strained U.S.-China relations, energy market instability, and regional conflicts. These dynamics directly affect industries such as technology, energy, and defense. In such a volatile environment, investors must be agile, understanding how global events and monetary policies influence sector performance and individual stock valuations. Focusing on macroeconomic trends and aligning your investments with sectors positioned to thrive despite the turbulence will be key. Chapter 2: Investment Strategies for 2024. Navigating 2024's market requires balancing growth potential with risk mitigation. Diversification across sectors and asset classes remains paramount, but investors must be strategic in identifying sectors that are likely to perform well under current conditions. One key strategy involves focusing on defensive sectors, industries that perform relatively well regardless of economic conditions. These include healthcare, utilities, and consumer staples. These sectors provide stability during downturns or slow growth periods due to consistent demand. Another strategy is capitalizing on emerging sectors that benefit from transformative trends, such as renewable energy, artificial intelligence, and electric vehicles. Despite short-term volatility, these areas are expected to grow exponentially, driven by long-term technological shifts and regulatory support for sustainability. Additionally, tactical asset allocation, shifting investments toward sectors based on short-term trends, is becoming increasingly popular. This allows investors to react quickly to market movements, profiting from temporary spikes or dips in specific areas like commodities, technology, or energy. Chapter 3: Opportunities in Technology and Innovation. Technology continues to be one of the most dynamic and impactful sectors in the stock market. In 2024, the tech sector is undergoing a significant transition, particularly with the rise of artificial intelligence, AI, and machine learning. AI has moved beyond its infancy, now powering automation, predictive analytics, and decision-making processes across industries. Investing in companies leading AI development and adoption presents significant opportunities. Look for those with proprietary technologies, partnerships with other industry leaders, and the ability to scale their operations globally. Some companies involved in cloud computing and data infrastructure are also benefiting from the AI boom, as they provide the foundational tools needed for AI deployment. Cybersecurity is another area ripe for investment. With increased reliance on digital platforms and remote work, cybersecurity threats are more prominent than ever. Companies that develop advanced security solutions or provide comprehensive cloud protection are positioned for long-term growth. Additionally, the semiconductor industry remains crucial. With the continued demand for chips in everything from smartphones to electric vehicles and AI applications, investing in key semiconductor companies with robust supply chains and advanced manufacturing capabilities is a wise move. Chapter 4: Renewable Energy and Sustainable Investments. The global transition toward renewable energy sources is accelerating, driven by government policies, technological advancements, and a growing public demand for sustainability. In 2024, investors are presented with a range of opportunities in this sector, from traditional renewable energy companies to those involved in innovative technologies like energy storage and hydrogen fuel cells. Solar and wind energy remain the primary focus of the renewable energy revolution, with companies that manufacture solar panels, wind turbines, and energy storage systems continuing to see growth. However, newer technologies like hydrogen energy and carbon capture are gaining traction, offering diversification within the clean energy space. Investing in ESG, environmental, social, and governance funds, is another route for investors looking to align their portfolios with sustainability trends. These funds focus on companies that meet stringent environmental and social criteria, appealing to investors concerned about the broader impact of their investments. Chapter 5: Commodities and energy. Commodities are a traditional hedge against inflation and market volatility, making them an appealing choice for investors in 2024. As inflation continues to fluctuate and geopolitical tensions disrupt supply chains, commodities such as oil, natural gas, gold, and agricultural products have gained attention. Energy remains a highly volatile sector, but the continued global reliance on oil and gas, coupled with energy security concerns, suggests that fossil fuel investments may still provide short-term gains. Balancing these with renewable energy investments creates a diverse approach to the sector. Gold and precious metals are also solid hedges against market instability. Rising interest rates have historically created downward pressure on gold, but with concerns about future economic conditions, gold remains a valuable asset to consider for portfolio diversification. Chapter 6: Healthcare and Biotech. Healthcare, always a stable sector, is becoming even more critical in 2024, with an aging global population and ongoing advancements in biotech. The healthcare sector offers a combination of defensive investments and high-growth opportunities, particularly in pharmaceutical and biotechnology companies developing new treatments and therapies. Gene therapy, personalized medicine, and immunotherapy are among the leading areas of growth within biotech. Companies involved in these cutting-edge treatments are not only improving health outcomes, but also presenting investors with significant long-term upside. The challenge in this sector lies in identifying companies with promising pipelines and the ability to navigate regulatory hurdles. Investing in healthcare ETFs, exchange-traded funds, is one way to gain exposure to a broad range of companies in this sector, balancing risk while capturing the upside of innovative treatments. Chapter 7: The Impact of Geopolitical Risk on Markets. Geopolitical risk has always been a factor in global markets, but in 2024, it plays an especially prominent role. As the world becomes more interconnected, political decisions and international relations have an increasingly direct impact on stock prices and investment strategies. Investors must stay informed about global events and be prepared to adjust their portfolios in response to geopolitical developments. U.S.-China tensions. The ongoing rivalry between the U.S. and China is one of the most significant geopolitical risks affecting markets today. Trade restrictions, tariffs, and sanctions have disrupted global supply chains, particularly in industries such as semiconductors, technology, and telecommunications. Companies that rely on Chinese manufacturing or exports to China have faced significant challenges, while those involved in domestic supply chain realignment are benefiting. In addition, the U.S. and China are competing for dominance in emerging technologies, including AI, quantum computing, and green energy. This competition is driving innovation, but it also creates uncertainty for investors. For example, regulatory crackdowns in China on technology companies have led to significant stock price declines, while U.S. companies with exposure to China may face risks from further trade restrictions or sanctions. The Russia-Ukraine conflict. The war in Ukraine continues to have wide-reaching effects on global markets, particularly in the energy and agricultural sectors. Europe's reliance on Russian natural gas has been a central issue, leading to energy shortages and price spikes. As Europe seeks to diversify its energy sources, companies involved in LNG, renewable energy, and energy infrastructure are seeing increased demand. Fundamental analysis. Fundamental analysis focuses on evaluating a company's financial health and intrinsic value based on its earnings, revenue, growth prospects, and competitive position. This analysis involves examining financial statements, including income statements, balance sheets, and cash flow statements. Key metrics to consider include price to earnings, PE ratios, earnings per share EPS, and debt to equity ratios. Understanding a company's fundamentals can help you assess whether a stock is undervalued or overvalued, aiding your investment decisions. Investment simulators and paper trading. For novice investors or those looking to test new strategies, investment simulators and paper trading platforms provide an excellent way to practice without risking real capital. These tools allow you to create a virtual portfolio and execute trades based on market conditions. By experimenting with different strategies and analyzing your performance, you can gain valuable insights and build confidence before committing real funds. Chapter 11. The role of professional advisors. While many investors prefer a DIY approach, working with a professional financial advisor can provide valuable expertise and guidance, especially in a complex market like 2024. A financial advisor can help you develop a personalized investment strategy, navigate market volatility, and achieve your financial goals. Understanding the different types of advisors. Financial advisors come in various forms, including independent advisors, robo-advisors, and wealth management firms. Independent advisors typically offer personalized services, tailoring their recommendations to your unique financial situation. Robo-advisors provide automated investment management based on algorithms, making them a cost-effective option for investors with simpler needs. Wealth management firms may offer comprehensive services, including financial planning, investment management, and estate planning. Choosing the right advisor. When selecting a financial advisor, consider factors such as their qualifications, experience, fee structure, and investment philosophy. Look for advisors with relevant credentials, such as Certified Financial Planner, CFP, or Chartered Financial Analyst, CFA designations. Additionally, assess their approach to investing, whether they favor active management or passive strategies, and ensure it aligns with your investment goals and risk tolerance. The value of professional guidance. A financial advisor can help you navigate market complexities, offering insights into economic trends and investment opportunities. They can also assist with risk management, helping you develop a diversified portfolio tailored to your goals. Moreover, having a professional advisor can provide emotional support during market downturns, helping you stay disciplined and focused on your long-term strategy. Chapter 12. Conclusion. Building your investment strategy for 2024 and beyond. As we look ahead to 2024 and beyond, it is essential to recognize that successful investing requires a proactive approach, informed decision-making, and a willingness to adapt to changing market conditions. The stock market presents both risks and opportunities, and by staying informed, managing your emotions, and maintaining a diversified portfolio, you can position yourself for long-term success. This book has covered a wide range of topics, from market trends and sector analysis to behavioral finance and investment tools. Whether you are a seasoned investor or just starting, the key to navigating the stock market lies in continuous learning, disciplined execution, and a focus on your financial goals. By applying the insights and strategies outlined in this book, you will be better equipped to make informed decisions, capitalize on opportunities, and manage risks in an ever-changing market environment. Remember that investing is a journey, and with patience, perseverance, and the right approach, you can build wealth and achieve financial independence in the years to come. Asset allocation. The first step in building a diversified portfolio is determining your asset allocation. This involves deciding what percentage of your total investment capital will be allocated to different asset classes, such as stocks, bonds, real estate, and commodities. Your asset allocation should reflect your investment goals, risk tolerance, and time horizon. For instance, younger investors with a longer time horizon may opt for a higher allocation to stocks for potential growth, while older investors nearing retirement may prefer a more conservative approach with a greater emphasis on fixed income securities. Sector diversification. Within your equity allocation, it's essential to diversify across various sectors to mitigate the risks associated with sector-specific downturns. For example, if your portfolio is heavily weighted in technology stocks, it may be vulnerable to a tech market correction. By including exposure to defensive sectors such as healthcare, utilities, and consumer staples, you can balance your portfolio against potential downturns in more volatile sectors. Geographical diversification. Geographical diversification involves spreading investments across different regions and countries to reduce the risk associated with economic downturns in a specific area. In 2024, with geopolitical risks affecting markets globally, investing in international markets can provide opportunities for growth while reducing your portfolio's overall volatility. Consider including exposure to developed markets like Europe and Japan, as well as emerging markets in Asia, Latin America, and Africa, which may offer higher growth potential. Use of index funds and ETFs. Exchange-traded funds, ETFs, and index funds are excellent tools for achieving diversification. These funds allow you to invest in a broad range of securities, providing instant diversification with relatively low costs. For example, an S&P 500 ETF gives you exposure to 500 of the largest U.S. companies, while an international ETF may provide exposure to a diverse array of companies from various regions. By incorporating these funds into your portfolio, you can achieve diversified exposure without the need to manage individual stocks actively. Rebalancing your portfolio. Over time, as some investments outperform others, your portfolio may become unbalanced, deviating from your intended asset allocation. Regularly rebalancing your portfolio, typically on an annual or semi-annual basis, ensures that you maintain your desired level of diversification. This process involves selling assets that have become overweight and reallocating those funds into underweighted areas. Rebalancing can help lock in gains and reduce the overall risk of your portfolio. Chapter 10. Investment Research and Analysis Tools. To make informed investment decisions, you must equip yourself with the right tools and resources for research and analysis. In 2024, a wealth of information is available to investors, from financial news websites to analytical software. This chapter will discuss various investment research and analysis tools that can help you navigate the stock market effectively. Financial news and market analysis. Staying informed about market trends and economic developments is essential for successful investing. Reputable financial news sources, such as Bloomberg, CNBC, and Reuters, provide real-time news and analysis on market movements, corporate earnings, and macroeconomic indicators. Regularly following these sources can help you stay updated on factors influencing your investments and allow you to make timely decisions. Investment research platforms. Many platforms in-depth in-depth research and analysis on individual stocks, sectors, and market trends. These platforms often provide access to analyst reports, financial metrics, and historical performance data. Examples include Morningstar, Yahoo Finance, and Seeking Alpha. Utilizing these platforms can enhance your understanding of specific investments and help you identify potential opportunities or risks. Technical analysis tools. For those interested in short-term trading or market timing, technical analysis can be a valuable tool. Technical analysis involves studying price charts and patterns to predict future price movements based on historical data. Various technical indicators, such as moving averages, relative strength index, RSI, and MACD, can provide insights into market trends and potential entry or exit points for trades. Many trading platforms offer built-in technical analysis tools and charting capabilities.